Welcome back to the Ultimate Trading Podcast for beginner traders, where we take you through the essential tools and strategies you need to navigate the financial markets with confidence. In today's episode, we're going to focus on something that's absolutely crucial to making informed trading decisions: earnings reports. Now, you may have heard of earnings reports before, but do you really understand how to leverage them to your advantage as a trader? Well, by the end of this episode, you'll know exactly how to use earnings reports to fine-tune your strategy and make smarter, more informed decisions. Earnings reports are released quarterly, and they are packed with insights that can give you a deep understanding of a company's financial health, its performance, and its future prospects. As a trader, it's vital that you not only know how to read these reports but also how to interpret them in the context of market behavior. After all, the price of a stock can be heavily influenced by the information in these reports, and understanding the key components will allow you to better time your trades. So, let's break down what an earnings report actually contains. Every earnings report includes a few key sections that you need to pay attention to. First, there's the income statement, which is the profit and loss statement for the company. This document summarizes the company's revenues, expenses, and profits over a specific period. As a trader, there are a few important things to watch for here. You'll want to look at revenue, how much money the company made during that period. Then, dig into the gross profit and see how efficiently the company is producing its goods or services. Next, check the operating income. This tells you how much money the company made from its core business activities. Finally, the net income tells you the company's total profit after all expenses have been accounted for. But that's just one piece of the puzzle. The balance sheet is another essential part of an earnings report. This gives you a snapshot of the company's financial position at a specific point in time. It lists assets, which are the company's resources, cash, property, inventory, and so on. Then you have liabilities, or the company's obligations to others, such as loans or accounts payable. Subtract the liabilities from the assets, and you get the shareholders' equity, which shows the company's value after debts have been paid off. This is crucial because it gives you an idea of how much the company truly owns versus what it owes. Then, there's the cash flow statement. This part tells you how the company is generating cash and how it's using that cash. It's divided into three sections: operating activities, cash from the company's core business; investing activities, cash spent on assets or acquisitions; and financing activities, cash from loans or paid to shareholders. Strong cash flow from operating activities is a good sign. It indicates the company is making enough money from its day-to-day operations to support itself and its growth. Finally, there's the management discussion and analysis, or the MDA. This is the part where the company's management talks directly to investors about how the company is doing, what challenges it faces, and what their expectations are for the future. This section can give you a lot of insights into how well the company is being managed and what risks or opportunities may lie ahead. Now, let's take a look at why earnings reports are so important to traders. For one, they give you an in-depth look at a company's performance. By examining key metrics like revenue growth, profit margins, and operating income, you can get a sense of whether the company is performing well or if it's struggling to meet its financial targets. A positive report can signal a strong company, whereas a disappointing report might raise concerns about the company's future. Another critical aspect is trend analysis. By comparing current earnings reports with those from previous quarters, you can spot trends in the company's growth, profitability, or other key financial metrics. These trends are important because they help you gauge where the company is headed. If the company is consistently growing its revenue and profit margins, that's a good sign for the future. Furthermore, earnings reports often provide market expectations. Most companies will give guidance about what they expect in the future, how much they plan to earn, or how they foresee their operations evolving. As a trader, this guidance is invaluable. If the company reports earnings that exceed market expectations, it can lead to a surge in stock price. Conversely, if the company misses expectations, it could lead to a drop in stock price. So, let's get into a practical example here to make this a bit more real. Let's take a company like Apple Incorporated, one of the most well-known tech giants. In Q4 of 2021, Apple reported some very impressive numbers. Their revenue was up by 29% from the previous year, totaling a whopping $83.4 billion. Now, that's a massive increase, and it's a sign that demand for Apple products, iPhones, iPads, MacBooks, is growing, which is a positive sign for investors. They also reported a gross profit of $35.2 billion, which gives us a gross margin of about 42%. What does that tell us? It tells us that Apple is doing a good job managing its production costs. And then, there's their net income, which was $20.6 billion, up 25% from the previous year. That shows that Apple isn't just increasing its revenue, it's also becoming more efficient in turning that revenue into actual profit. Now, take a look at Apple's balance sheet. They have a total of $351 billion in assets, with $62 billion in cash. That's a lot of liquidity, meaning they have enough cash on hand to weather any storms or invest in future growth. They also have $287 billion in liabilities, with $105 billion in long-term debt. However, their shareholders' equity stands at $64 billion, which is a healthy sign of financial stability. But here's the kicker: Apple's cash flow from operating activities was $28.8 billion, which shows they're generating substantial cash from their core business. This kind of cash flow is crucial for sustaining future growth, paying dividends, or buying back shares. Apple's management also gave some positive guidance, talking about continued investment in research and development and the growth in services like iCloud and Apple Music. They also mentioned expanding into emerging markets, especially in China and India. They did acknowledge some challenges, such as supply chain issues and the global semiconductor shortage, but overall, they projected strong growth going forward. What does this tell us as traders? Looking at the earnings report, we can see that Apple is in a solid financial position, with strong revenue growth, healthy profit margins, and a strong cash flow. This makes Apple an attractive investment for traders looking for long-term growth potential. But, at the same time, those supply chain challenges are worth monitoring. If those issues persist, it could impact Apple's ability to meet demand and hurt its stock price. But it's not just about reading the numbers, it's about interpreting them. By analyzing earnings reports like this, you can get a clear picture of how a company is performing and how it's likely to perform in the future. And that's the key to making smart, informed trading decisions. Before we wrap up, I want to ask you, how do you approach earnings reports when making trading decisions? Do you focus more on the numbers, or do you pay close attention to the company's guidance and management discussion? Leave a comment below and let us know your thoughts. I'd love to hear from you. That's all for today's episode. Remember, understanding how to analyze earnings reports is a powerful tool in your trading arsenal. By carefully assessing a company's financial health and future prospects, you can make more informed and competent trading decisions. Thanks for tuning in, and until next time, happy trading!
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading!